Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
My name is Rob Clayton and thank you for joining me. As you can presently see, the Australian dollar is somewhat mixed after opening slightly stronger on Monday, but now lingers ahead of the RBA rate decision, which is widely expected to see rates on hold at 4.35%. Still keep an eye on the statement though, as a hawkish hold is most likely the outcome after the rate announcement. Meanwhile, traders will also be looking this week to the Fed's update forecast, which also expects to see rates on hold at 3.75%. With no change there, all eyes will be on the statement as it's Kevin Walsh, the Fed chair, first sitting. And it'll be interesting to see how things unfold from there. Technically, though, the market has buckled and we've got three bearish candles and therefore may see another pullback towards the region of 70.35.40 or even deeper to 69.60.70, where we see this engulfing candle. And if so, could see a correction to 71.5. With all eyes on the Fed, the euro is still wavering and still a little bit in trouble, as I feel, with the technicals still weak. May see a pullback towards the support area of 114.5 and then maybe see a correction. And therefore, that could see the dollar retest the area of around 100 and then see a decline. Dollar yen showing a slightly weaker play as a pivotal week slowly unfolds, with the Fed expected to hold rates, while the Bank of Japan is widely expected to raise rates by 25 basis points to 1%. With the BOJ's move largely priced in, attention will also look for any further guidance. A hawkish surprise could challenge the dollar yen, but still seeing the resistance around the top side of 160.5 to 161, and also an area where there was much talk of intervention. Let's see how the market plays. With the technicals buckling and declining, I'm in view that the market should drop back towards the 159 or even as low as 158.5 and reassess. Turning to sterling, the market is also looking somewhat buckled after the recent firm performance on Monday, and therefore could see a move back towards the bottom side around 133.70 to 133.2025, and then possibly see a bounce and maybe even a correction. Turning to commodities, we can see the market is heading closer towards its topside cap, seen around 4,400, which may contain the price from progressing further. In light of how the pattern sits, I'd still like to sit out for the moment, remain neutral, but following how the guidance of how the technicals indicate or reflect to where the market could trade, I still feel there is a possible rejection from the top side and may pull back towards 4,100. Turning to oil, well, since the market gap lower, still sits around the level around 78.5 to a base now around 77.60.80. Given the fact that the market is trending to a somewhat bearish case, and I have been neutral, let's see how the market plays further into this week. As we could see another down test, but I'm still a little bit skeptical due to the lack of detail surrounding the proposed US-Iran agreement. So therefore, we could see more noise. So it's probably best to sit out still for the moment until we get a bit of confirmation from the technicals, which aren't there as of yet. Well, that's a wrap. Thank you for joining me. And as always, look out the interest report and I hope you enjoy the great start to the day.